We all go about picking out stocks a bit differently, and this is how I do it. Hello there and welcome to another video on investing in the stock market. If you enjoyed the video, hit subscribe, drop me a comment if you have any questions. I answer all of them. So I've talked a lot about which stocks I own, and I've talked about every stock specifically, reasons why I'm invested in them. But I haven't yet done a video on how I go about picking stocks and the whole process, how I get started and every step I take along the way. Now, a couple of things to keep in mind: that there's no blueprint for picking stocks. We all do it differently. We're all looking for different things. You have things such as growth investing, value investing, income investing, short-term, long-term, day traders, and so on and so on. But I have a long-term view on stocks. I look at fundamentals, and that's what I'm all about. Because when we're talking about stocks, we're not talking about the little ticker symbol with a price besides it. We're talking about businesses, actual companies. So if you're looking at a stock, there's no point in looking at the stock. You need to look at the underlying business, because the stock price is just a reflection of how well the company is doing. So I don't follow this all the time, but these are some check boxes that I use. So to get started, I usually hone in on a specific part of the economy. It could be a country or a sector or a continent. So I want an industry that is growing, that is going to be important in the future. And I just think about, right, what are we going to need in the future? What are we not going to need, right? So example of industries and sectors that I like are robotics, artificial intelligence, information technology, waste management, video games, some banking, aerospace and defense, and so on, autonomous learning machines. So this sort of narrows down the amount of company you look at. And if you find an industry that is going to grow a lot in the future, there's a better chance of finding stocks with good growth left in them. And when you find an industry, I usually look if there's like a clear-cut number one company. Now, you can't always just say, oh, there we go, this is the number one company. There's usually a lot of competition, and you can't always tell which company is the best. But there's usually a good idea of the 2 or 3 top dogs in every industry. So just look at the top ones. I wouldn't even bother with companies not considered all that good. And the most important things that I look for are growth and innovation. I look at revenue growth year over year, growth in margins, and I look at the latest products, the latest services, and how they're sort of switching up their business model, because this is a sign of a company that is going to do well going into the future. And the future is what investing is all about. So, some industries, there's a clear-cut number one, like in e-commerce, it's Amazon. In semiconductors, it is Nvidia. But in most industries, it's a couple of companies. And when you've honed in on these couple of companies, or the one company you like the best, I look at the quality of products and services. Now, again, this can be tricky, but it's usually known that companies are in different brackets. They're in different price ranges and different quality brackets. So an example would be in automakers making cars. It's a well-known fact that the German automakers like BMW, Mercedes, and Audi makes slightly higher quality cars than, let's say, Ford, Honda or Suzuki, but they're all good cars, right? But some are reasonably priced and they sell more cars, while some companies have a little higher quality. And I tend to like the companies going for the highest possible quality. If their products are expensive, so be it. And of course, you always want the best. Don't settle for second, find the best. And when you've found 1 or 2 or 3 stocks, you can easily do a side-by-side comparison and look at the business model, which is basically how a company sells its products and everything that goes into it. Balance sheets, which are like free cash flow, margins, debt, assets, revenues, etc. And then you have management, which you sort of have to do some research on your own. I don't always look at the entire management team. I usually just watch an interview with the CEO. I would suggest looking up a show called Mad Money with Jim Cramer. He has a lot of CEOs on all the time. And if you're looking to invest in a big American company like Boeing or Apple or whatever, there's a good chance they've been on that show. So check it out, Mad Money. But the management can be difficult to get a hand on. And when you've preferably found the one company, you should check the company as well as the stock history. In terms of the company, you sort of just have to look at the reputation of the company. Where was it beginnings? How old is it? And how does people sort of look at this company based on its past? And with the stock history, I want a stable upwards trend with stable price increase and stable dividend. I'm not a fan of big ups and downs. Ups and downs, I mean, volatility is not bad, but if there's a lot of ups and downs, there's usually a lot of hiccups along the way, which we don't want. Now, when preferably at this point, you should have honed in on one specific stock. And this is actually very, very important for me. Do you have any personal experience with the company? So this goes without saying, I don't need to explain it. But for me, an example would be I'm a huge gamer. I play video games. Therefore, I chose to invest in Activision Blizzard. I have some Apple products. I know other people that has, and the quality is really good, really strong product. So I bought some Apple stock. And so if you have some personal experience and that experience is good, or you have any friends or relatives, this is definitely a big plus. But it sort of comes at the end because, you know, if you want to invest in Lockheed Martin, there's a good reason you have no experience buying fighter jets, F-35s for millions of dollars. So this one is just a bonus plus. But sometimes this is the first thing that happens. People have a really good experience with a company and they go, is this a public company? Oh, it is. Maybe I want to invest in it. So that's how a lot of people go about it, right? So Apple is the obvious boring examples. Everyone has experience with Apple, and when they find out they can invest in Apple, they're like, why not? The products are great. I'll buy some stocks. Bonuses. So these are just plus. These are nothing a stock or a company has to have for me personally to be a good investment. Things such as dividend, which is very important. But again, if I love a company, it doesn't matter what it pays in dividend. A good dividend would be like 1.5%. If a company is paying 1.5, 2% plus, that can sort of make the difference, and I can go to that company just because of the dividend if it's a close race between two stocks or ETFs. Stock price, you know, I don't look too much at the stock price. I believe that a great business is going to do well no matter what, and most great companies have really expensive stocks. So if you're afraid of investing in expensive stocks, as I've said earlier, you would never have invested in Amazon, for example. When I bought Amazon, it was really expensive. It's still really expensive because it deserves the price. But you preferably want to buy low. So if you see a great opportunity to buy and you think a company is really cheap, low PE ratio, low PB ratio, go for it. Currency, you know, all stocks, well, a lot of stocks trade in different currencies. US dollars, Canadian dollars, euros, British pounds, yens, etc. So if you spread your money out all around the world, you'll have different currencies, and that can be good, because if you have all your money in US dollars and the US dollar goes down, your portfolio takes a massive hit. And currencies are also relative to each other. So if you have US dollars and you want to invest in a European stock in euros, you might want to buy when the US dollar is strong and the euro is weak, right? So you get more for your money. And then you also have diversification purposes. If you have, you know, all your money in tech, which I think a lot of young investors do, and you see a chance to invest in a bank, go for it. Some diversification is very important. Never buy a company just because you want to diversify. That's a big mistake. But if the choice is between three companies, you know, two tech companies and one aerospace and defense company, and you have 100% of your money in tech, your best bet is to go with the aerospace and defense company if you like them all, right? So keep that in mind. And just a reminder, if you want to sort of do your own reflections, these are my top holdings: Alibaba, Activision Blizzard, Amazon, Artificial Intelligence and Robotics ETF, Apple, Chinese Tech ETF, and Take-Two Interactive. So we got a lot of tech here, and you can check out yourself if you think these stocks passes the test and checks all the boxes. Let me know how you pick stocks. I know a lot of people pick different stocks than me, and some people are definitely more value, sort of low price, dividend orientated than I am. But for me personally, all my best investments has been in sort of high price growth stocks that some people shy away from because they think they're way overpriced, but I've sort of invested anyways, and it's worked out brilliant for me. So that's been my personal experience. I look for growth, I look for just the best companies regardless of price, but I have some safe value dividend plays such as Waste Management, JP Morgan, Lockheed Martin, Intel Corporation, and a couple of ETFs. So I'm not all growth, I'm not all tech, I have a little bit of everything. So drop me a comment if you have anything to say. If not, I'll see you in my next video.